We've seen that market managing to post that 0.5% again today, but overall still weak on the week. Where did you see some positive turnaround in stocks today?
Okay, good afternoon, Samantha. Before today, we've seen 5 days of downfall of index at the stock exchange. We had expected that prices, there would be a turnaround because the prices were attractive enough. As first quarter ended and the company started to issue dividends, it probably didn't meet the expectations of majority of the investors. And so if you look at the attractiveness of other investments like securities, bonds, or T-bills, you'll understand why some investors are selling down some of their positions to invest on other securities with higher yield or returns.
Looking at the fixed income side of the market, we saw some strong demand coming through for treasury bills at the auction on Wednesday. Have we seen a subsequent decline in yields?
No, we have not experienced a climb in yield. What we have experienced is a further decline in yields because these yields, as I just said earlier, are very attractive. We saw 91-day treasury bills drop from about 7.8 to 6.8. That's a whole 100 basis point drop in yields on the short end. And then on the 180 days, we saw a similar drop of about 50 basis points. What this has done in the secondary market is that people who tried to buy and then, because there was an over-subscription, came to the secondary market to mop up some more, and then yields actually dragged down. For bonds, a little bit of that bullish trend came into the bonds market, of course, on the short end too. And so we experienced the drop of about 30 basis points on bonds of short maturity.
We've got inflation figures expected for June out on Monday now. Inflation standing at 12.4% in May. Standard Bank predicting it could range between 11.2%, 11.6%. What's your inflation outlook?
Yeah, I wouldn't be that very positive that inflation will drop, basically because of clamorings of labor unions and all that. That's not effective yet, but if you look at general food prices and commodity prices and then what had happened with the foreign exchange market, you would know that those would have significant impact on general inflation level because Nigeria is majorly dependent on imported products, and we've seen a climb in the dollar value over the naira, especially on the secondary market that is outside the W-DAS window of the Central Bank of Nigeria. So basically, we would expect inflation probably to be at the levels at which they are now or drop slightly. But expecting a major drop to single-digit levels may not necessarily be tenable or attainable at this period.
What is the market pricing in when it comes to interest rates? Is there another 50 basis point hike on the cards?
Come again, please.
What is the market pricing in when it comes to interest rates? Are they expecting another 50 basis point hike?
No. 50 basis point may be too high. It may just tighten out all, funds in the money market. This itself, increasing MPR, that's what we call it, interest rate, really helps, to curb inflation. But excessive hike in that rate also could cause a problem in that it restricts or hinders, increases lending rate generally. And then if we don't have credit and lending in the economy, basically, our business activities may be stifled. So we've seen increases from, 6.5 levels to present level of 8%. We may see a 20-25 basis point increase if at all there would be an increase. What the CBN might do basically that I think would be to maintain MPR at 8%.